The Medibank IPO is the largest government float in recent years. Demand from retail investors has been strong. Now with the institutional book build about to be opened, we spoke to two highly rated investment managers about what they think of the IPO and the outlook for the business. There is no argument that Medibank is poised to be a quality business, says Investor Mutual's Anton Tagliaferro.
Medibank's a very good company. It's the number one health insurer in Australia. It's got over 30% market share. It's a pretty well managed company.
Perpetual's Matt Williams says the business is a stock holding for the long term.
Medibank will be a good stock to have. Depending on the final price, of course. But I don't think it's going to be a short-term bonanza for investors. I think it's more of a stock to watch and put away for the medium to longer term. But over that period of time, with everything going okay and the regulatory environment not changing, then you could certainly envisage steady increases in both profit and dividends over time.
There are, of course, a number of challenges facing Medibank, most notably government regulation, as Williams alluded to earlier. But this risk can be an opportunity.
The risk is, of course, the governments do change and government policy can change. That is a risk as well if you are reliant quite heavily on the government for your success. So that is, in some ways, that's a strength, but it's also a risk, going forward, that government policy may change. Although, having said that, given the ageing demographics, given the pressure on the federal budget, it doesn't look like any government in the near future will be inclined to try and change the balance between private and public. If anything, they'll want private to take over more of the public expenditure on health.
The success and potential growth of Medibank is dependent on a number of challenging factors. The first challenge is, of course, cost. Indeed, Medibank has been touted as a cost-out story.
There aren't that many spots where there's excessive costs just hanging there. So I think a lot of the low-hanging fruit has been removed from Medibank in the last few years leading up to the float. There are some areas they can improve. So yes, costs will reduce, but it's not going to be a huge, quantum of costs.
Perpetual's Matt Williams sees an opportunity to manage the cost of claims, but any benefits from this reduction will have to be shared.
The big opportunity for Medibank Private is to reduce the amount of claims costs. That is the big bucket where costs could be reduced. And anything they can do around that, and I think they will over time, be able to bring that some of that cost down, and that will be to the benefit of shareholders, and also, but some of that benefit has to be shared with the industry as a whole, the whole private health insurance industry, because of the system known as risk equalisation, where the burden of large claimants are shared throughout the industry. So Medibank Private won't necessarily retain all that benefit, but will retain a good portion of it.
Williams believes Medibank's scale can also help improve costs, particularly getting efficiencies from private hospital providers.
The ability to get better deals from the private hospitals, I think, is a key management focus, and they talk about that in the prospectus, that because of their scale, because of their size, they can potentially do better deals with the hospital providers, and which will ultimately bring those claim costs down.
Another big challenge is growing its policyholder base.
Medibank have been struggling to grow their policyholders, and in fact it's been their discount brand that's been growing as they put their secondary brand on the aggregator sites. The strength of Medibank is they do have a top brand Medibank, and AHM I think is the secondary brand, and then they've got 400,000 already in the secondary brand, and they are talking about how they utilise their two brands to sort of make a stronger company, which they're still working on that.
Its discount brand AHM does have implications for the bottom line. Medibank also confronts a number of other challenges in the way it will sell its overall brand.
Disintermediation is quite a threat for all the private health insurance players. The rise of the aggregator sites, the iSelect, Compare the Markets, these are putting pressure on players such as Medibank Private, and we've seen in their figures that Medibank Private are increasing sort of lower value add customers through their AHM brand on these aggregator sites, to perhaps the detriment of their full service Medibank brand. And so that's one of the key things that we'll be looking for as the company lists and into the future.
Ultimately, Williams and Tagliaferro view Medibank as a quality business, but it would all come down to the price.
The range, as you know, has been set at $1.55 to $2. It's clear there's a lot of retail demand at the $2 mark. Overseas demand will probably be quite strong, and domestic institutions. So it's going to go at least at the $2 mark. Retail investors only pay $2 maximum, but it wouldn't surprise me if perhaps the institutional price goes above $2, given the level of demand and given the strength in share markets at the moment.
Perpetual's Matt Williams won't be drawn on the pricing specifics, but believes there will be no problem with selling Medibank.
I won't specifically talk to the price, but it's quite clear that there is a lot of demand from both retail and institutional investors, both in Australia for that, and then institutional interest from offshore investors, I think, is very strong as well. So the government is sitting, I think, quite nicely in the sense that they'll be able to sell Medibank Private without any problems at all.